Okay, chapter 4, double entry bookkeeping part B. We have done some of it, and we'll just give ourselves a very quick review of that. We learned division of ledgers, the three types of ledgers: sales ledger, purchase ledger, nominal ledger. The definitions are given on the screen. You can remind yourself with the definitions. And then we have another thing called cash book, which maintains the cash and bank transactions. So this basically contains the cash and bank account. We don't have cash and bank account separately. They're both combined in the cash book. Okay. I'll assign you this. I think I've only created assignments for the first two chapters. So
Cancel the first chapter.
have
Don't
I?
forget it.
Yeah, chapter 3 and chapter. We're still doing chapter number 4. Right now, I must assign you chapter 3. Anyway, so next we also learned about the two-column cash book. Read this again to remind yourself of what we did in this. But in two-column cash book, we have bank column and the cash column. This won't be normally be tested in the exam. In the exam, you will see three-column cash book, which is discount column, cash column, and bank column, right? On one side, we have discount received. On one side, we have discount allowed. We'll discuss about that. Contra entries in cash book, you know what that is? I'm not sure if you know what that is. So, Musab, go ahead, tell me what that means.
So what?
Contra entries in the cash book. What does contra entry mean in cash book?
So I don't know.
Saleh, what about you? Do you know what contra entry is?
Sir, it is appear in both sides, the credit and debit.
Hmm. Can you give an example? Like, why would that happen? The reason contra entry would exist? In which situation? Can you tell me the situation?
Like sir, when we uh like sir, when we write uh
Okay, so contra entry appears on both sides of the cash book, but the reason behind that is there are two reasons mainly. One is that you are withdrawing money from the bank, turning that into cash, or maybe you're turning your deposit cash into bank by depositing the money. So you deposit cash into bank, which will, credit the cash, debit the bank, or the other way around. If you take out the money from the bank from the ATM, debit the cash, credit bank. I hope that makes sense. That's what contra entry means in this context. A contra entry is one which appears on both sides of cash book. That's a very simple definition. Now, we also discussed this one. We spent a lot of time discussing this, and we talked about the difference between debit card, credit card. You don't really need to explain the differences. I believe in your, like, they will not test your knowledge of differentiating between this credit card and debit card, but you should know that it's a type of payment, right? It's a payment made out of bank. Okay. We can also pay checks, which is becoming uncommon these days. There is something called credit transfer. Credit transfer is essentially bank to bank transfer, right? And then we also have this thing called standing order and direct debit for repeated payments. If the payments are repeated, like they come in, okay. So for standing order, it's a fixed interval every week, every month, fixed date, fixed amount. For direct debit, it's recurring. It happens again and again, but the time when it's gonna occur and the amount is not clear. It's not fixed. You get it? It's maybe one direct debit comes after a week, another one comes after 2 weeks, another one comes after a few days, right? Yes, Saleh.
and sir, when I want to buy something from you in the same moment and I give it you the money, it's called credit transfer, right?
If you pay me the money from bank, yes, that is of course a credit transfer. Uh, you can even give me cash if you want, but that's a different. We're discussing bank, or you can give me a check if you want. You can give me a check. Check credit transfer. If I am a shop, then you can come and use your debit card. You can use your mother debit card, right? if I have a
Yes,
shop,
sir.
let's say. But if I'm an individual, I'm not a business, we're just exchanging something. In that case, check would be okay. But the more, well, in real life, it's gonna be cash in real life because you cannot trust. If we know each other, if you don't know each other, if you're trading with a random person, in that case, you'll exchange with cash. But if you're, let's say, trading with someone you know, then I would say check would be fine or credit transfer would be fine, right? Anyway, okay, let's move on. Actually, there's a small difference between the two. Check is a physical sort of a payment, while the credit transfer is electronic. Okay, we can lose a check, but electronic payments have their own benefits. That's the point. And these days they have become so easy. With the with mobile app, you can just enter the number, the account number, and you're done. Okay, walk through 4.1. Here they'll show you an example of what a cash book looks like. Mamata started business with a capital of 20,000, which she transferred into bank account. Okay, 20,000 capital, two accounts involved are capital account and the bank account. Capital account is credit. We learned that in the last class and the one before that and the one before that. Capital account is going to be credit because that's the nature of credit. That's the nature of capital account. Credit capital account. Look at the folio. It says the double entry is going to be in CB. What is CB? Cash book. So if we go to cash book, look at the debit side. That's what happened, right? Capital was put into bank, and so bank was debited by 20,000. And we detailed that as capital. I think it makes sense. What are we putting here as folio? Although folio is not part of your examination, but still we can understand, we can appreciate the meaning of it. So this means nominal ledger one. If you go to nominal ledger one here, page number one, nominal ledger. Does that make sense? It's just a reference. Are you with me, Musab? We together?
Yes, sir.
Okay.
I,
So yeah, go ahead.
no, I have the book. Yeah, I don't think.
All right. And so, by the way, look, this is your cash book. I didn't introduce you to the cash book. So here you go. Meet the cash book. You have two sides to it, a debit side again, and a credit side. And on the debit side, if you notice, unlike the other T accounts, we have two different columns, a bank column and a cash and a bank, a cash bank column, right? And so in this case, the capital was put into banks, and so we debited the bank column. Are you getting the point?
Yes, sir.
Yes, sir.
Okay, good. We'll go on to the next transaction, which says paid rent of premises 650 by standing order. Standing order means? Saleh, go ahead. Standing order.
Sir, a standing order when you survey a fixed amount every month.
Fixed interval.
Uh,
At fixed
fixed
interval.
interval. Fixed interval.
At fixed intervals.
Interval.
Intervals. Okay. So the point is, it's a bank payment. It's paid out of bank. Paid rent of premises by standing order means by bank. So what's going to happen? Your rent of premises account or rent account, rent payable account, where is it? It should be in a nominal ledger, of course. Where is it? Rent payable account 650 debit. By nature, expenses are debited when paid, and bank account will be credit. If you go to the bank account, see rent payable credit. Is that clear, Musab?
Yes, sir.
Okay. And number five, oh, I mean December 5th. Purchased goods 9,500 on credit from Lodi Road traders. Okay, so what's happening in purchases? Lodi Road traders, this is our liability. This is our trade payable. Two accounts are involved. Purchases by nature are debited. They increase inventory, that's one way to think. There are costs have a debit nature. And so purchases will be debited, and which account will be credited? Lodi traders, Lodi Road traders, because they are our liability. Okay, when liabilities go up, they're credited. So if we go to purchase ledger, under that you have Lodi Road traders, and if you notice 9,500 credit, and in the purchases account, you will see 9,500 debit. I think everything is good so far. Number 9, on 9th December, withdrew $150. Withdraw doesn't mean drawings necessarily. It is for office use. It's not for owner's use. So withdrew $150 from the bank account for office use. Now, again, what's going to happen here is we're converting you may think two accounts that are involved are bank and office. No. There's no such account as office. The two accounts we are currently bringing up is bank account and cash account, isn't it? So basically,
Yes, sir.
you as an owner, you went to the bank and you took out $150 for your office use. You withdrew that from the bank account with your debit card, right? And so you converted your bank into cash, and that is an example of what kind of an entry, Musab, can you tell? It has a name when this kind of a thing happens.
Withdrew.
Yeah, when you turn bank into cash, you turn your bank amount into cash amount. You withdraw money from the bank account. Do you have any idea about that? When we do that, what is it called? It has a name, specific name, this kind of a dealing.
When you turn the bank into cash.
Or cash into bank, vice versa. Anyway, any other way, I mean. Saleh, do you know the answer? When we
Drawings?
no. Drawing is when
Uh,
owner takes the money.
yes,
We
sir,
are
one minister.
when we
Sure.
change from bank to cash or cash to bank. None of you, come on. When you listen to the recording again, you will realize you're not paying attention. It's the contra entry. This is what a contra entry is. This is like a real example of contra entry. You take out money from the bank, you put
Sir,
it.
sir, actually, it's come in my mind, but I don't know. I wasn't like
No. Not
comfortable
an
to
excuse.
answer
Not
it.
an excuse. Don't say that, please. If you have an excuse for something, make sure it's a legitimate excuse. You cannot say it was in my mind. I didn't say it. Come on, you didn't say it. That's what matters. Withdrew 150. So let's go to the cash book. It appears on both the sides of cash book. If you notice, your cash account is debit and your bank account is credit because that's what you did. Withdrew some money from the ATM, let's say, right? Bank column is credit, cash column is debit. And if you notice in the details, of course, you can write the opposite because that's where the money went. Bank is credit here because of the rent. Bank is credit here because of the cash that we converted. You must give, this just gives the reason why something is debit or something is credit. So if bank is credit, why is it credit? Because the money went into cash. And it's a contra entry. That's why we wrote the C. You can do that in exam. Now, in the exam, you don't have folio column, but next to this, you can write C in the bracket. All right, to show that it's a contra entry, indicate that it's a contra entry. Let's move on to the next one. Paid advertising expenses, $90 in cash. It's an expense which we're paying in cash, so advertising expense account will be debit. Advertising expenses account debit, and the cash account is going to be credit because that's where the money is coming from, and this is where the money is going into. Sold goods sales on credit to central dealers. Musab, can you tell who is central dealer for us? Under which category we can put them?
Um, Sold goods for such amount credit to central dealers.
What are they for us?
Um, Wait, it's
They are, say anything. Like what are they for us? Just whatever comes to your mind. Sold goods on credit to central dealers. It is,
that we sell we
yeah,
sell them on
yeah.
credit.
Yeah. It's very simple. I
The
don't,
trade
yeah,
trade receivables.
perfect. Very good. So central dealers are our credit customers and they are our trade receivables. Very good. And all the trade receivables like central dealer and ABC Limited, D Limited, and E Limited, those all your credit customers, under which ledger do they appear? We have three ledgers: sales ledger, purchase ledger, nominal ledger. Under which one does central dealer appear?
Nominal.
Nominal. It's a personal account of the dealers of the business.
Uh, Sorry. The sales ledger, yeah.
Very good. Um, you will become perfect at this. Believe me, only if you revised. Are you getting it, Musa?
Yes, sir.
Okay. Please don't make me say that again. Show me an improvement, please. I can see you going the wrong way. Really. I'm just reminding you in the beginning before it gets too late. Okay. So sold goods sales account will be credit and central dealers will be debit. The reason they're debit is number one, they are our customers, credit customers, our receivables, which you said they're our receivables. We can even call that a receivables ledger, actually, trade receivables ledger, because that's what it is, right? Sales ledger is basically your trade receivables ledger where you have all these trade receivables written. And so central dealers is also a trade receivable. It's an asset. When it goes up, it's going to be debited. And sales is by nature credited. Where is it? 4120. In the details, we write the reason. Why is sales credit? Who did we sell to? To central dealers, right? All right. Paid Lodi Road Traders account by check. We paid a check means we made a bank payment to Lodi Road Traders, and they don't say the amount, but we know that we owe them. Let's go to Lodi Road Traders. We owe them 95,000. Oh, 9,500. And so we're just gonna now we're paying this liability. You see, purchase ledger is trade payables ledger, right? Trade payables ledger. Loaded or traders, these are our suppliers, our payables, our liability. Now, when you pay your liability, what's gonna happen? Your bank will be credit and your liability account will be debit to show that the liability is going down. When liability goes down, it's debited, right? Are we all at the same page? Do you understand that?
Yes.
Very good. And so cash book, of course, will be credited to show that the money went to Lodi Road Traders. Lodi Road Traders now debit. It shows that their account is also closed. There is no balance remaining because we owed them 9,500 and we paid them 9,500. We're done. With Lodi Road Traders, there's no balance. Nothing will go from here into the trial balance, right? Because there's no balance.
Okay.
Okay, done with this. Bought motor vehicles 5760 and paid by credit transfer. That's basically, let's say Saleh, you bought a motor vehicle from me, right? And you say, how should I pay you? I don't have cash. I'll give you a bank account and you will send me a credit transfer of 5760. That
We
is the best way to
basically paid from the bank.
when you pay from bank, yeah, credit transfer. So again, we use the bank account because that's where the transaction is happening from.
Yes. Sir,
Yeah.
the bank account for personal means, sir, we will do drawings account, right?
Again, please.
Sir, it is for business bank account for personal use.
Where
Means,
is
sir,
it?
sir,
Oh,
it is,
okay.
yeah.
Okay, if let's
Sir
say
means,
Saleh. Yeah. I'll complete your sentence. I'm sorry. I think I get your question, but can you? Okay, go ahead. Finish it. Finish it. What was the question?
sir means we will put this date under the drawings account.
Although this is not the case here, Saleh. Here they're not buying motor vehicle for person. They never said that. I'm telling you, imagine if you are a businessman and you bought a motor vehicle for your business, and then you tell me how should I pay you? So there's nothing about drawings. Yes, if you as a businessman, Saleh, you have a business card, you don't have a personal card, you don't keep a personal bank account, let's say, although that's unusual. Uh, you don't have a personal bank account and you buy a motor vehicle from me for your own use, not for the business, for your home, all right? And you pay
Yeah,
me through your business bank account. Of course, yes, you'll put it into drawings, you're right. So
yeah. I
if that is
mean,
the case, Masalan, you bought this for personal use, you will never use the motor vehicle account because that's for business. You will use drawings account debit and bank account credit. That's what you will do. I think that makes sense to everybody. But in this case, the reality over this in this question is motor vehicle account will be debit and bank account will be credit, right? Motor vehicle account will be debit and bank account, if you go to that, will be credit. Let's go back and look at the next one. Mamata took 3,000 from the business bank account for personal use. Okay, Saleh, I think your eyes, they mixed these up, these two. Because you were talking about drawings. I think this one is about drawings, number 28. So Mamatha took 3,000 from the business bank account for personal use. What are the two accounts involved here? The bank account and the drawings account. Very good. And so
yes,
drawings
sir.
account.
I meant the number
Yeah.
28.
You got confused, I think. You read this half and then you read this part. Anyway, so you were right in that case. So yeah, the double entry for this, if we just look at the bank perspective, when Mamata took money, bank is definitely going to be credit. And Musab just said it that drawings will be the other account involved. Double entry duality principle tells us one debit, one credit. And so if we know bank is credit, the drawings must be debit. And we also know by nature, if you remember the nature of all these accounts, by nature, drawings, when they incur, they're debited, right? That's the nature of these accounts. And so drawings account, let's look for it, will be debited, and the bank account here will be credited. So we have seen all these transactions taking place. What about balancing in a cash book? It may look a bit confusing at first, but it's just like any other balancing. So this will also help us revise the balancing part. Please focus. How do we balance any account, any given account? I'll give you a very, very quick example, a quick reminder also for Fatima if she's watching the recording. Since we haven't discussed balancing together, this will be just a very quick 1 minute, 2 minute overview. So let's say we have a bank account and so many things came in worth like 5, 10, 20, $30. That's the total debits. And let's say the total of your credits is 400. It clearly shows that our debit is bigger by 100. Now, the way we balance is what we do is we look at the difference between the two. And on the smaller side, we fill it. We make it the same by putting this on the smaller side and we call it balance CD, balance carried down. Of course, we also put the totals column. Now the totals are the same because we put the difference on the credit side. And so the total is 500 each. And then balance BD is brought down always on the opposite of this one, right? Always on the opposite side of this one. And it is very logical as well because you see that your bank account is bigger on the debit side by 100 and we end up bringing it down over here, balance brought down of 100. In reality, you will not just have 500, 400, you'll have tons of them. You'll have tons of entries, but you're going to add them up and then compare the totals. On the smaller side, since it's a recording, watch it 100 times if you want to. On the smaller side, you put balance carried down, put the difference, you put the totals at the bottom, and then bring it down, BD, on the other end, on the other side. Does that make sense? Is that logical, Musab?
Yes, sir.
Saleh, logical to you?
E- yes, sir.
That's a regular T account with one column. Cash book is the same thing, but it has two columns. How do we balance? We imagine the other one is not there. So what we do is we balance cash as if this was the only thing we have. You know what I mean? So we focus here. You get it? We focus on this. So that's 150 in total, the debit side. And the credit side is by total, that is 90 plus 60, again 150. Well, we don't have anything remaining in cash. There's no balance. Oh, wait a minute. No, my bad. Sorry. What am I doing? Actually, the total, this is balance CD, right? The total is just 90 on this side, not 150. And so the difference 60 is put on the smaller side. Please give me a second. Okay, sorry. So I at first thought this is one of the other transactions. No, the only transaction in the cash is this 90 on the credit, 150 on the debit in total, total of debit, total of credit. The credit side is smaller by 60, and so we put balance CD on the credit side. And debit side is bigger. Of course, we bring it down over there. This is what matters. Balance BD is what matters. CD is actually the opposite of what matters. Because it makes sense, right? We have 150 in cash, 90 went away, we have 60 remaining. And so this balance BD represents the reality. CD is just like fill in the blank because we have to total, we need the total to be the same on both the sides. It's like a double entry for balance BD. You get it? CD is credited, BD is debited. It's like just a transfer to the next month. So everything that we have in this month, the month ends, we transfer to the next month. We will have to restart the meeting, but before that, very quickly, same thing happened in the bank account. This is 20,000, this side is 20,000. And the credit side, if you add it up, it's going to be, well, until here. It's going to be 19,060, I think.
60.
No, 19,960, 19,860. What am I saying? Am I right? No. 19, yes, 19.
1960.
No, 1860. Let's restart the meeting. Let's restart the meeting, okay? And then we'll do this. Okay, so it was 1960, right? 19,060.
Yes, sir, 1960. I added in the
19,060.
calculation.
If you add these all up to this point, of course. That side is 19,060. That side is 20,000. The difference is 940. So on the smaller side, we're going to put 940 and we'll bring it down. Of course, bank could have possibly been on the credit as well. It could have been here as well. And so we'll have two balances in a balance in a cash book. Two balances, one for bank and one for cash. Bank might also be a credit balance. The reason is we can have a bank overdraft. We can have more. We can use more money than we have in the bank account by using overdraft facilities. Cash, however, will always be debit balance. It will always be debit balance or zero. It can never go negative. Cash will never be credit balance. Remember that. We can never have this over here. It's impossible. If you see cash account credit balance, 100% something's wrong, right? It's not possible because you cannot spend more than you have in cash. In bank, yes, you can spend more than you have. It becomes your liability automatically. Cash, it's physical, right? You cannot give more than what you hold in your hand. You get the point?
Yes, sir.
All right. Explain what is meant by contra entry in cash book. Since it has come up a few times, I'm expecting you to be able to solve this as a homework. Give two examples of contra entries in a cash book. There are only two examples. It's not like we have tens of them. It's just two examples. There are two possibilities. Either withdraw cash from bank to cash or deposit cash from cash to bank. Okay, bank overdraft, we have discussed this as well. Of course, we'll go through that again, but briefly, we have discussed it. I'm wondering if we can finish this today. I think it's going to be a bit difficult, but let's try and manage that. And we'll have one recording for the whole chapter. You can come back to this whenever you want. As earlier explained, the cash column and the bank column of cash book are balanced separately as they represent two separate accounts. So they're treated as if they're completely different accounts. That's what we did, right? We treated the bank column totally separate from the cash column while balancing. Okay. The balance on cash column will always be debit. Read this paragraph, very important, at the start of the next period, right? Because we can never have negative cash. We can always have, the worst we can have is zero, right? Nil. It is not possible to have a credit balance on cash account. It is, however, possible to have credit balance on bank account because the bank allows you to spend more money than you have. Occurs when more has been paid out of the bank than was put into the bank. You get it, you open the bank account, you put $100 into it, but then you spend $900. The 800 is overdraft now because you spend 800 more than you even had. You spend 900, you had 100, overall 800 is your liability. Okay. In that case, the bank account will have a credit balance brought down and the cash will still have a debit balance brought down. So we'll have two balance brought downs in a cash book, which I believe will be shown in the next example. A bank loan is different to bank overdraft. This can be asked in a question in an exam. Actually, this was asked in one of the recent exams. So you must understand. Why do you think? Please try to avoid looking at the book and tell me why do you think bank loan is different from a bank overdraft? Musab, go ahead. If something comes up, don't be afraid that it's going to be wrong. Just go ahead and say it logically. Imagine it's real life. So in real life, you took some loan or you took some bank overdraft. What might be the difference in them? Tell me, please.
Sir, bank overdraft is something when your cash, when your when the amount from the bank finishes, and then if you purchase, it is going on credit, bank overdraft. And bank loan is when you ask for a particular amount from the bank.
Mm. This point was the most important. Bank loan is where you ask for a particular, you apply for it and you get approved, and it's a specific amount, and usually it's the higher amount. And you're right again, but your choice of words wasn't so good with the bank overdraft. Your analysis was correct though. That it's when you need it for short term, right? Let's say we have run out of cash and we just need it for short term. We're not gonna usually we don't apply for it. We just have a limit on it. So your bank will have a limit on how much overdraft you can take possibly. So yeah, you got it right. Good one. It is fixed amount which is paid into the business bank account. That's about the loan. That's how loan is different. It's a fixed amount, as you said. It must be repaid at an agreed date. So in 5 years' time, in 2 years' time. That's another point you could have made. And the interest is also fixed. It's usually fixed and it's payable on the total amount borrowed. Right?
Yes, sir.
Okay. On overdraft, by the way, you may even not even have interest, but in a bank loan, you will most likely, I mean, almost certainly have an interest. The reason is how would bank make the money? The bank exists and it gives you the loan. Like it wouldn't give you a 50,000 loan and ask for nothing in return, right? Let's move on. Let's move on. We need to speed up. Okay. Walkthrough 4.2. What do we have here? Everything is same, I believe, as shown in 4.1, but except her drawings were 5,000 rather than 3,000, and everything else is the same. So where's the drawing thing here? So this time it's 5,000. It used to be, or it was before, it was 3,000. Okay, and since that happened, the balance changed, right? Now the bank account credit side is bigger. You see, if you total all of that, it's going to be, so debit side of bank account is 20,000, and the credit side is how much? It was 19,060, and now it's going to be 21 because you have 2,000 more. Please check. Yeah, I think so. That's right. 21,060. And so the credit side is 21,060. The smaller side is which one? The debit side of bank is smaller. And so on the smaller side, we put balance CD. We bring it down on the credit side. And so we have a credit balance for the bank account. Does that make sense? It's an
Yes, sir.
overdraft. We call that overdraft. Why that happened? Because Mama took a lot of drawings. Until 3,000, that was fine. She was just close enough. Her bank account only had like 900 something remaining, 940. And then she took 2,000 extra drawings, and that led to her having an overdraft. Cash remains the same way it was, and we still have a debit balance of 60. If you notice, we have two balances. Hope it's not too confusing. Is it all good, Musab? You good with that? Hello? I can't hear you. I think we're gonna move on.
Yeah, can you hear me?
Yes, I can hear you now. Okay,
It
so
is it is a little confusing.
it is a little confusing. Exactly what part is confusing, if you can tell, otherwise we can move on. I mean,
The balance part.
the balance part. Now, yeah, certainly it is confusing. Not your fault. But imagine these two are separate. Okay, just imagine that. Bank is different, cash is different. Just balance the bank account on the smaller side, just like you do balance CDPD. On the smaller side, put the difference. On the bigger side, bring down difference. Is that clear, like that balancing thing? For cash,
Yes.
for cash, the smaller side is which one in this case? For cash, this side is smaller, right? The credit side. And so we put it again, balance CD on the smaller side, balance BD on the bigger side. Very simply, right?
Okay.
Cash will always have a debit balance, if any. Either there'll be no balance or there'll be a debit balance. There will never be a credit balance. For bank, there are two possibilities. Your bank account can have some money and have a positive, have a debit balance, or your bank can be negative. It can have an overdraft where you have a liability basically. it will have a credit balance. A bank have two possibilities. Bank has two possibilities. Make sense?
Yes.
Okay. Some of the students may have a confusion that bank is our asset. Not always, right? If it's a bank can have a debit balance and a credit balance. It can be overdraft and just a regular bank balance. Okay, let's move on. The three column cash book. And now we start talking about the three columns. I didn't realize when I thought that we can finish the whole chapter in today's class, I didn't realize that we have this. It's a big part of, I mean, it's going to take some discussion. Cash discounts and discount allowed, discount received. So I now doubt that. Oh, no, 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 no. Never mind, never mind. It's not that long. I thought we are going to have this and then a few more topics, but this is actually one of the last topics. So let's try and finish this. Many business maintain three column cash book rather than two. And then the third column here is to record discount. We will discuss this later on in details, but we have two types of discounts, cash discount and trade discount. Trade discount is given at the time of transaction. You go to the shop, now you're negotiating, right? You're negotiating the price. That's called trade discount. You says, well, you say, I'm buying 50 units. Please give me some discount. And of course, you will
Sir,
get a discount. Yes,
in this three-column cash book, you have to take out the percentage, yeah?
you're right. Have you done this before?
Yeah.
Right. So you can recall some things out of it, but I would say when we're doing it together, try to have a clear mind, right?
Hmm.
Don't carry on any misconceptions. That's the biggest thing in
Okay.
accounting, right? Just saying, since, it's sometimes difficult to understand accounting when you've already done it with someone like when you've already done it before and you have some misconceptions. Do you get my point?
Yeah.
Yeah. So just saying, remove the misconceptions if you have any. But you're right, there's percentage calculations. Anyway, we have trade discount where we negotiate. We say that I'm buying in a big quantity, give me a discount. And then we have cash discount. That is when you pay within a certain amount of time. Now you have negotiated the price. This is the new price after the trade discount. The supplier tells you, when are you going to pay? If you pay within 14 days, I'm going to give you cash discount as well. You got 20-30% trade discount. That's different because you bought so much. Now, if you want the cash discount, that is basically just a reward to you from me to pay early. Does that make sense? Normally, if you take 20 days, well, I won't give you that reward. If you pay me within 14 days or 10 days or 9 days, whatever the policy is, I will give you 2 or 3% discount. Does that make sense? That's called a cash discount. You get it?
Yes.
Cash discount is an allowance or basically a discount given to a customer when an account is settled within a time limit set by the supplier. The word here is prompt payment. We say when the payment is made promptly or timely, right?
Sir, I don't understand the definition written.
Okay. I'll repeat that. Is an allowance given to a customer, basically a discount given to a customer when account is settled within a time limit set by the supplier. So supplier says 14 days and you will get a discount. Pay within 14 days, you get a discount. That's the time limit. Supplier will set that. You get it?
Oh, okay.
It's basically a payment discount. If you pay early enough, you'll get a discount. So, you understand it now?
Yes.
Okay. It's an allowance given to customer when settled within a time limit by an account does not have to be paid in cash. Yeah. Don't think that cash discount is connected to cash in any way. The customer can pay in cash with a check, a bank transfer, a credit transfer, however they pay, doesn't matter. The point is that's not the reason it's called cash discount. It can be cash or bank. The reason it's called cash discount is the timing of it, right? Not the method. An account does not
Okay.
have to be paid in cash to be qualified for cash discount. The time of payment is the deciding factor, not how the payment is made. Okay, even if they paid us in bitcoins, you get it. We'll still call it cash discount because they paid within a time limit and we'll give them a discount on that. Cash discount means encouraging customers to pay their accounts promptly, on time, not getting too late. The supplier will receive an amount slightly less than due amount. However, the money is paid early and it's available for other uses. That's one thing. And another thing is, if you don't have such encouragement, the customers will just keep delaying the payments and some of them will not be will even some of them will forget about it. They won't even pay. So if you encourage them by giving discounts, they will prefer paying you first because you're giving them discount if you know they pay within a set limit. It can go two ways. Okay, discount can be allowed, discount can be received. Discount allowed is when you, as the seller, will allow the discount to your customers. It is an expense for you. You'll be accepting less payment. Okay, you sold goods worth $500. Now you'll only accept $450. The remaining $50 will become your expense. Discount received is when you are the one receiving the discount. Somebody else is giving you a discount. That's called discount received, and it's an income. And so if you owe, you can listen to the recording again. If you owe someone 500 and you receive a discount of, let's say, 10%, you will only pay them 450. The remaining 50, where does that go? As an income to your discount received account. Very simply, discount allowed is your expense, discount received is your income. Sounds good?
Yes.
Yes, sir.